This is Scott Becker with the Becker Private Equity Podcast, the Becker Business Minute Podcast. This is a quick note on inflation, 4 quick points. So today, the Consumer Price Index, the inflation reading came out for the month of January, and the readings were sort of a little bit higher than expected. So I'll go through 4 quick points. Month over month, inflation was up 0.5 percentage point or 0.5%. This is, keeps inflation in the annualized rate. It would generally be about 6% generally, but the actual real inflation rate right now is a little bit higher than that. So that was about as expected. Second, the annualized rate of inflation over the last 12 months is still up 6.4%. The hope was that annualized rate would have come down to 6.2% versus 6.4%, so a little higher than expected. Third, this leaves the markets in a bit of a point of uncertainty this morning. Futures are still relatively flat. They've been up or down on potential inflation readings. And fourth, the markets react to these inflation notes, the slightly higher inflation than expected, with sort of some concern that this will lead Chairman Powell to continue to aggressively try and fight and raise interest rates to fight inflation. So the 4 quick points are inflation up 0.5%, annualized inflation 6.4%. The 0.5% that it was up is the highest amount since October. The annualized rate is 6.4%. It's a little bit higher than expected. The markets are still trying to digest all this morning. Futures are still relatively flat. And fourth, the great concern is, again, that Chairman Powell will view sticky inflation or higher inflation than expected as cause to keep on raising rates. That's sort of the gist of what we're seeing out there. Thank you for listening to the Becker Business Minute, the Becker Private Equity Podcast. Thank you very much.